Hey guys, so this is our first weekly review. So I'm going to start with April 26th. So I'm just going to show you basically how the trade played out and how you could have took advantage of it by entering and exiting, and just kind of like what you're looking for. Just so you can go through these every week and try and get more experience with it, and then that will help you. So looking at the 26th of April, this is the US dollar. So for example, so the Monday was the 26th. So this was Monday. This was Tuesday. This was Wednesday. I'm not gonna do like the sessions like this. I'm just gonna do it for this weekly review, and then you'll get the point of what I'm doing. I talk about this in the course already, but I just want to show you. Okay, and then this is Friday. Okay. So basically what happened is we came down to the 9,700 range. We ended up respecting. So when we look left, which we'll have to jump up on a higher time frame. When we look left, there was an area of interest at the left-hand side. So that's the reason why it corrected at that price, as well as we had a double top. We had an M pattern. So again, the difference between the M pattern and the double top is they're the same in the sense of the two hits at the high, but once the M forms, it will always correct. Okay, so if you missed, for example, if this is on like a currency pair, if you missed that sell at the top, then you would know obviously to wait for the correction to take the sell down. You never enter where it doesn't make sense. So that's the whole point of back testing, guys, is like you really need to understand what actually is happening. So for Monday and Tuesday, we ended up, for Sunday, we ended up respecting 9,700. We came above. There was an area of interest on the left-hand side. It rejected previously. Now it's rejecting again, and it went back to 91. So Monday, Tuesday, Wednesday, it went to 91, okay? So in return for Euro USD, let's highlight this. So we have Monday, and then we have Tuesday, and then we have Wednesday, and then we have Thursday, and then we have Friday. Okay, so let me just make sure the 30th is Friday. Yeah, it was Friday. Okay, perfect. So since the dollar was respecting that 9,700, it ended up getting stronger. So that was on the 26th. So if you look at the 26th here, when Euro USD is dropping, obviously that means the dollar is stronger against the euro, right? So that's why it was dropping from 2,100. It respected and continued to drop. So when we got the reversal was Tuesday and Wednesday. So it ended up respecting 2,600. So just like this, it ended up respecting 91 and then it ended up dropping. So the dollar got weak. So in return, this ended up going from 2,600 to 21.5. Okay. So really, really pay attention to the numbers. That's what really matters. So if it's past a full number like 121, then it's going to a quarter, a half, 3/4, so on and so on. So the numbers are really, really important. So since, like I said, the dollar dropped, on Wednesday, it ended up coming up on Wednesday, testing that 121.5. Then Thursday and Friday are midweek reversal, so it went from bullish to bearish, and that is because we ended up respecting basically the 90s. We ended up closing above that 9,700, which this was our area of interest before. We ended up closing above it and completely going back to this resistance. Okay, so then we ended up testing it one more time and then dropping. So it's honestly, you can combine this together super, super well. But again, like the numbers mean everything, and you also have to understand the impulses and corrections. Okay, so how do we take this trade? So let me show you. So let's say, for example, you are on the US dollar and you're saying, okay, well, we can see here Monday, Tuesday, Wednesday, it ended up getting strong to around 91. It came up to an area of interest. It ended up faking out of that structure and then dropping, okay? So Wednesday, so let's talk about Monday for a second. So Monday ended up gaining strength, which means that it ended up dropping, okay? So let's say, for example, you didn't want to take the sell and you were in a buy position down here, okay? So the number we would be looking for is around 2,600, 2,550, okay? So anywhere in this. So what ended up happening here is it ended up dropping here and then coming back down. So once it drops there, you want to draw like a little minor zone because you want to watch this price to see how it reacts, okay? So this was around 25.50. So how we get this buy is price came down and tested, ended up respecting that 2,900. It usually comes down and tests at least twice, sometimes 3 times. So this is once, this is twice, this is three times. So anywhere around this number is where you can place a buy. Now we're looking at a higher time frame structure. So for example, this is what it looks like on the 1 hour. This is what it looks like on the 4 hour. Like we're still bullish, okay? So then when we're looking at the 1 hour time frame, again, you're focusing on the higher time frame first, and then to take an entry, you can drop down to the 30-minute, the 15-minute, whatever you want to do. So just for this, we can get price action on a lower time frame. So for example, looking at the 15-minute, we had a little W pattern here. We ended up correcting, coming back up to that 12900. Basically, it's staying below a round number at 121. So then it comes down again, tests once, tests twice, and then completely reverses. So even if you got that buy entry here, it's fine. And you could, there's 2 things that you can do. When you're entering at a specific number, and it's trending, once it's trending like 20-30 pips, you can set your stop loss at break even, or as it's trending and you want to set your stop loss closer, that's completely fine. It's whatever makes you the most consistent. So when we're looking at H4, we're dropping down. You can drop down the 15-minute, the 30-minute, even the 5-minute, and you're watching to see how it reacts to that price. Sorry, my dog. So that's what I'm saying. So it tested that price 3 times. So this was once, this was twice, and this was the 3rd hit, and then it ended up rejecting. So around 25.50 and 26 is where you could have got the entry. So once that ended up happening, it ended up respecting and then completely shooting up. So now you're looking to see, okay, well, where is price going. So what we want to do is we have our 121.5 marked up. So it completely past 121.2, which is a quarter of price. So it's coming to the half of price. So what ended up happening is, like I said, it went to that 121.5. So people would be like, okay, well, how do I take this entry at 121.5? So when you're looking at the higher time frames, whether it's the 1 hour or the 4 hour, once it gets to that specific price, you can jump down on any time frame you want and you can see that price action. Okay, so even the 5-minute time frame, it doesn't matter because you're entering on that specific number no matter what. So as you can see, like at that 121.5, it wasn't closing above, it was respecting. So anywhere around this price, even if you didn't get it at 125, this ended up coming up to correct. So it ended up testing 125, broke, tested, and then we have an M pattern forming here. Okay, so here, anywhere around these prices, like I said, is where you could take the sell. So if you missed it at that 125 half of price, you could have took it here. Okay, so there's always something creating at the lower time frames, whether it's a double top, an M pattern, a W, whatever it is, it's telling you that price is not going to go higher. And then we can add in our extra confluences. So when we're looking at the 4-hour time frame, we're looking at, okay, well, this is an area of interest right here. It ended up closing with a shooting star, which means, again, candlestick analysis is just an extra confluence, but when it's at a specific zone, they come in handy because it's just telling you that the market is going to reverse. So that's when we know, okay, let's drop down to the lower time frames to take our entry. And then as well as like when you're dropping down to the lower time frames, what you can do is, where did that go? Oh, right here. What you can do is when you're at that lower time frame, even the 30-minute or the 15-minute, whatever time frame you like to enter on, that's completely fine. But when you're entering on it, like let's say you were going to enter close to 121.5, then what you would do is you would enter right at that specific number, and your stop loss can be super tight because the banks aren't going to push it higher. So it could be like a 2-pip stop loss if you really wanted to. Even in this example, when you're dropping down to the 15, you can see 1 hit 2, and then we have an M pattern creating. So around this specific number is where we can take the sell anywhere in here, and the stop loss can be right above this structure, and again, a tight stop because like it's not going to go further because we're looking on the higher time frames for the trend, and we know that the market is going to reverse. Again, it helps when you're understanding the times when Monday, Tuesday, Wednesday go one way and then Thursday, Friday reverse. You know what I mean? So that also helps as well. So that's how you do it for that. And then what ended up happening here is it's coming back down to a round number at 121. So it ends up breaking. There was no retest. It ends up breaking, then testing here. Okay. So how you get this entry is the same thing. This is on the 4-hour. We would drop down to the 30-minute. Where was that? I don't know why it does that. Sometimes it like erases. Okay, let's go to the 1 hour. Okay, I don't know why it did that. But anyways, so what ended up happening, like I said, is it comes to that 121.5 and then ends up dropping and then continues down, tests that 121, and then it ends up retesting here. So when we're looking at the lower time frame, so when we go down to the 15-minute, there we go. It ended up breaking that number, then testing, and then continue down. So even to get that price action here, we could go down on the 5-minute to clearly see that it's respecting structure. So it ends up breaking, comes up, tests. So anywhere around this specific number is where you could take that sell. And then let's say, for example, you missed it at that break and retest. Well, this is the 5 minute. Price ended up breaking out of structure, tested this specific price, which is at a quarter price, 2,800. Ended up showing a pin bar reversal. Again, here's your entry. Your stop loss is literally like right above structure. You could even put it here if you wanted to, 13 pip stop, but you have a way tighter stop when you're entering on the lower time frames. But again, it depends on what works for you. So then going back to the 1 hour time frame, we ended up respecting 121.5, coming down, testing the 121, and then coming down again. It ended up respecting 21.50, ended up making a W, ended up correcting this price again, and then coming back down. So then same thing with the dollar. Since this increased, this ended up dropping, and then now we're on this week. So all you're doing is looking at H4 structure, and you're just going down to a lower time frame once it hits that specific structure / zone / price, and then you're taking advantage of it. I'm actually not going to do all of them. I'm just going to do Euro USD, GJ, and Euro NZD, and then I'll keep switching like every week. I'll do different pairs that we go through, but I'm not going to do them all because you can just go over these examples. Okay, so for GJ, for example, this was Monday, Tuesday, and then Wednesday, Thursday, Friday, and then it tanked. Okay, so what ended up happening is when we look on the higher time frames, we ended up coming down to this area of interest around 149.200. So basically it wicked to 149.55, and then it ended up rejecting. So basically what this is saying is that it's staying above a round number at 149. So it ended up rejecting. So again, when we're looking on a higher time frame like the daily, for example, we're still very, very bullish. Unless we ended up breaking this structure, then we could go down and retest all of this because price has been in an uptrend on GJ for a while. So to take advantage of this, what we could have done is, again, on the 8 hour, we can see that we need to watch this level because this was an area of interest. It ended up impulsing, correcting, had another impulse here, and then now we were watching that 149 price. So in order to take an entry here, what we would have done is watch it on the higher time frames, 4 hour or 1 hour, to see how it would respect. And then, like I said, on 30-minute time frame, you can take it on the 30-minute time frame. After this breakout right here, it tested, continued up. You could take it anywhere in here. The 15-minute, it really gives you a more precise look at what's happening. So even like jumping down on the 1 minute time frame, if you ended up, or 5 minute, doesn't matter, you could get it right in an early move. So you would just have to watch to see how it's reacting to that specific price. So even if you didn't see it coming down to that 149.50 or whatever, 149.55, then we could wait to see how it closes above this specific zone. So right above here, we could see the price action and then take advantage of it. So what ended up happening is it ended up coming up. So even if you were unsure about this entry over here, just wait to see how it reacts. So this is our next area of interest. It ended up breaking and testing. So to get this entry right here, what we could have done is go on the 15-minute time frame and end up taking it. Again, it's trying to break above 150, so it ends up breaking 150, testing. So it tested once, twice, and then continued up. So anywhere around this price, like I said, is where you could have took an entry. So anywhere in here. So sometimes, like I said, like you can get in. So this broke and tested here. Sometimes it will come down one more time at least. So don't be freaked out. Just set a stop loss right below. Like, we're on the 15-minute time frame. As long as you're looking at the higher time frame structure and following the trend, it doesn't matter. So you can have a tight stop, but make sure your stop loss is right below this, just in case it does come down. It's really a patience game. So then what ended up happening is it ended up testing that price, coming up, and then the reason why I tested here is because this price completely broke. There was no retest, so it comes down, test, and then continues up. So then even looking at this on the 5-minute time frame, it shows you a W pattern. Okay, so it has 1 test, 2 tests. So your entry would be anywhere in here at this price, so around 150, 450, 155, stop loss right below, and then your target, again, you're just looking left, so I'll talk about the targets in a second. So that's where you can get the advantage of putting a tight stop, is when you go on those lower time frames. A lot of people are different though. Like, some people like taking entries on 1 hour or 30, so you had to have a wider stop. So that ends up coming up, and then we're looking at the higher time frame. So once you're entering on the lower time frames, you want to go right back to the higher time frame to see exactly where the trend is going, or else you're going to get really confused. So now we're coming up to this area of interest. We're watching to see how it respects. Okay, so what ended up happening is it ended up respecting, closed below 152. Again, we were coming up to a round number at 152 and ended up closing. So how to get this entry, we would go to a lower time frame. That's what it looks like on the 15, or at that 30. This is what it looks like on 15, and then 5-minute looks like this. Okay, so it ended up coming up to around 152.4. So then it ended up dropping, coming up here to 152.2. So anywhere around these prices, like this is what I'm saying. Once it completely drops, and you can see there's a level of interest on here on that 5-minute, you can take that entry right there if you end up missing the original entry. It's just, it has to make sense of where you're taking that entry. So for target wise, you're just looking at each level. So for example, let's say you took a long right here, put your stop loss right below. Obviously this area is going to break because it's in between structure. It's very minor. It's more than likely to break. So then you're just looking left to see, okay, well, what do we have here? So this could be a potential TP1, but again, it is in the middle of structure. It's more than likely to break. So this completely just shot up, tested, and then continued. So your next target, you're looking at, okay, well, where did it reverse? This is your next target. So I talk about this in the videos, obviously, but the most important thing to do is look left. And if there's nothing on the left-hand side, just go up a higher time frame, and then you can see the overall structure the higher you go. So if this were to end up breaking, this is our second TP at the top, or third TP at the top. Okay. Let's talk about Euro NZD quick. So Euro NZD is really in a range, but honestly, I have seen a lot of people send me their profits on this with just catching it counter trend trading, which is completely fine. So for example, what's happening is we're looking at the higher time frames. It's clear that this is an area of interest, this is a minor zone in between, and this is also an area of interest of support. So what ends up happening is we're watching to see how it reacts to this price. Okay, so it ended up respecting once, coming up, coming down a second time. Okay, so to get this entry, what we would do is jump down on, I'm going to rewind this so you can see, jump down on the 15-minute. And so basically this is a double bottom. So it's fine to get that original entry, but just know that price is going to test 2 or 3 times before it ends up reversing. So even on the 5-minute time frame, It ended up coming down. To be honest, on this one, 15-minute looked better because it ended up coming down, testing. Even if you missed this original entry because it came down and quickly went up, again, just look at the zones. So this price broke, so it's coming up to 167, okay? So 167 comes up, it ends up testing, and then ends up going up. So even if you miss this double bottom entry, just take it on the retest up. So again, you can put your stop loss right near price because the banks aren't going to move it below. It's already been tested. And then you're just looking for your potential targets. So when you're looking at your targets, you have to go back on the higher time frame to see the overall move, okay? So for example, this is a level of interest. Oops. This is a level of interest. So that would be our potential TP, which it ended up testing, coming down, ended up testing this price, and then coming back for more. So that's what I'm saying. You can move your stop loss in profit if you want, or you can set it at break even because you're not losing either way. So that's up to you. So it ended up coming up to that 68.2. So this was our next area of interest. That's why it came up there. So you can extend it. So all you're doing is looking left. So people were taking the sell and buy each way. So that's how they were taking advantage of it. So even this is showing you that it's a shooting star. So it's coming up. This is a sign that it's going to reverse. So even by looking at this and jumping down on the lower time frame, so 30-minute, 15-minute, 5-minute, whatever time frame you want to do, just on these exhaustion wicks, you could have took the trade or here or here. So it's really a cycle, and it's just repeating itself every single time. And what you're doing is focusing really hard on the numbers. So it ended up coming below 168. There was no retest at 168, so it ends up testing. Here's your entry. Your stop loss is right. You can put it right above, but even at this structure, that's fine. And then again, your target is going back on the 1 hour time frame. Watching for this, because now it's ranging so much that it needs to eventually break out. So your first TP would be here, and then honestly, with how many times it's moved, you would get annoyed of this pair and you'd end up moving on. But the whole point is I'm showing you where you put your entry if you took this trade. So ended up breaking structure. This needs to continue to break to go lower. So it ends up coming up and testing, ends up moving higher, shooting star, which means it's going to reverse. So even with this, so going back on the higher time frame, the reason why it's testing here is because it's testing that round number at 169, ends up wicking at it and reversing. So people say, okay, well, how would I have took that entry? Well, this ends up coming up, closes with a shooting star, and the shooting stars work really, really well. That's almost the only candlestick analysis that does. Shooting stars, pin bars, it just means it's going to completely reverse in the direction. So when we're seeing this on the 1 hour, the 30-minute, the 15-minute, it's just giving us more price action to where we can enter. So if you miss that original sell, you can wait for it to come up and retest. It ended up testing and then continuation down. So again, taking a short here with your stop loss right above, and then so on and so on. So that's really how you do it. So let me write that out in a text. So looking at higher time frames first for the trend. So H4 or H8 or even H1, doesn't matter. Once it arrives to that higher time frame zone, jump down to 30, 15, or 5 to get more price action. to get a precise entry and tight stop. If you want, like, again, people enter on 1 hour, 4 hour, 30, and they put a wider stop. Like, it honestly depends on the person, like whatever you want. But yeah, once it arrives to that higher time frame zone, then you're jumping down on lower time frames to take your entry. But make sure every time, or I'm going to leave that just so you guys can write that down. Once you enter on a lower time frame, make sure you go back to the higher time frame to follow the trend and target. Okay, so that's really important. So I'll let you write that down for a second. Okay. So another thing I want to mention is, like, when you're focusing on one pair, you can watch it from each zone and take advantage of it. And then when you're looking at the higher time frames to start the week, you can say, okay, well, this is a bullish trend. And then you're really paying attention to each day, each zone, what time it's moving at, stuff like that. So it all comes together, but the basis of backtesting is really understanding how it's moving, what numbers it's respecting, and how to take your entry. So basically what I just explained today. So I will do this every single week to kind of explain it, and that will help you see different scenarios and everything will start to click.